Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to quickly go over the latest earnings report of EQB, which released yesterday. Right at the beginning, I should say the EQB earnings were really solid in the last quarter, and the forecast for 2023 was even better in my opinion. For those of you who are not familiar with EQB is the 7th largest Canadian bank by market cap and is a fast-growing digital bank and a competitor for conventional banks in Canada. I analyzed their stock and compared that to other conventional big banks in Canada in detail in a separate video on this channel, and I will leave a link to that video in the description box below. I personally own 152 shares of EQB in my TFSA, and after this earnings report, I'm actually going to add to my position again, as I believe EQB is extremely undervalued at the moment. The company reported their earnings yesterday after the closing bell, and I think it's an overall great earnings report with some amazing numbers regarding their core business, the growth of their deposits, the number of their customers, their plans for expansion, and the Concentra Bank acquisition, and also their dividend increase, which are all great news. Okay, let's review the earnings report highlights first. EQB adjusted earnings is up 13% year over year, and their adjusted diluted earnings per share is up 14% year over year, which are great growth numbers in terms of the earnings. Their adjusted net interest margin, or NIM, is 1.94%, which is a solid number for a business which pays significant interest income to its customers. NIM is a profitability indicator that measures the net interest income a financial firm generates from credit products like credit cards, loans, and mortgages, with the outgoing interest it pays to holders of saving accounts or GICs. In summary, a positive net interest margin suggests that a bank operates with positive profits, while a negative figure implies investment in efficiency. So their NIM is 1.94%, which is great. I think this is a record number for EQB. Also, their adjusted return on equity is 15.6%, which is all good numbers in terms of both growth and profitability metrics. Furthermore, all types of loans grew significantly this quarter, and their assets under management is up 18% year over year. They have now close to 290,000 customers in Canada, and their digital transactions are up 63% year over year. Their forecast was even more exciting in my opinion. Of course, keep in mind that the next earnings report could be volatile, as they will include the acquisition costs and balances of Concentra Bank in the next report. So this is their basically guidance for the next quarter. Also, the fourth quarter will include various impacts of Concentra Bank acquisition. EQB today expressed confidence that it will achieve existing adjusted guidance for the full year 2022, basically pre-Concentra, of 12 to 15% in total lending portfolio growth on an organic basis, and year to date they basically grew by 17%. 8 to 10% adjusted EPS growth, year to date 11%. Adjusted return on equity of 15%, year to date they achieved 15.6%. Adjusted basically pre-tax income of 12%, year to date they achieved 16%. Book value per share up 12%, year to date they achieved 16%. And common equity tier 1 or CET1 of 13%, and now they have 13.3%. So they basically achieved all the goals that they mentioned they will achieve basically in the previous year. These are all great growth numbers that EQB's forecast for the remainder of the year and also for the 2023. They also increased the dividend this quarter again by 7% quarter over quarter. This is not even year over year, this is quarter over quarter. This was the fourth consecutive quarter that they increased their dividend, and they plan to continue to increase this dividend until 2027 by something close to 25% year over year, which is insane. Finally, they discussed the integration of Concentra Bank into their financial statement of the next quarter and the detailed basically forecast for the 2023. Now, let's see how the new earnings and guidance will change the valuation of EQB using my personal discounted future earnings model. First, I include the new EPS number for this quarter, so the last 4 quarter EPS of EQB will increase to $9.03. The EQB guidance is around 10 to 15% growth in EPS and around 15% return on equity for future. Let's be conservative and in the bear case put in 6% growth for short term and then 5% growth in EPS for the long term. I consider a terminal multiple of price to earnings of 6 for this case, which is a historical bear multiple for EQB. In normal case, I consider a 10% growth in the short term, which is still below the management guidance, and I assume the growth rate will drop to 8% in the long term with a multiple of 8. In the bull case, or the best possible outcome, I consider EQB can grow by 15% in short term, around 12% growth in EPS number and 3% from margin expansion, which is what EQB's guidance actually tells us. And then growth rate will slow down and drops to 11% in the long term, with a terminal multiple of 10. As you can see, for a 10% return for expected return of 10% year over year in the next 10 years, the fair value of EQB is equal to $69, which means compared to current share price of $45, EQB shares are traded at a 54% discount today. This is a huge margin of safety, and that's why I'm so confident to buy more shares of EQB here. Overall, this was an amazing earnings report for EQB and the shareholders of EQB, and I'm happy with core business performance and will continue to hold my EQB shares and will add to my shares during this dip. There you are, guys. I hope you enjoyed the video. If you enjoyed the video and my coverage of earnings report of Canadian companies, consider subscribing to the channel to see similar videos. I will wait for my other Canadian companies' earnings report to hopefully cover those as well. But until that time, I see you guys in the next video. Farewell.